The finance fix with Dimuj, everyone. Today we'll cover the basics of managing cash flow. This is the lifeblood of any small business. Cash flow is the movement of money in and out of your business over a period of time. Cash inflows are money coming into the business from sales, investments, and loans. Cash outflows are money going out of the business for expenses like rent, salaries, and purchases. There are three types of cash flows. Operating cash flow. This represents day-to-day business activities such as sales, wages, and bills. Investing cash flow from buying or selling assets such as equipment or property. And then the financing cash flow is for loans, repayments, and investor funding. Why cash flow matters? Does it really matter? Do you need cash to run your business? Yes, you need. Cash flow matters because it keeps your business running on a day-to-day basis, even more than profit in many cases. Here's why it's crucial. You need cash flow to pay bills such as rent, utilities, staff wages, and supplies, not your profit. Good cash flow means less need for emergency loans or costly overdrafts. It helps you handle slow sales period or unexpected costs without panicking. With steady cash flow, you can reinvest in marketing, staff, or equipment with confidence. You may be profitable but poor in cash if the customer hasn't paid yet. That money doesn't help you right now. We talk about more about this in the next slide or so. These cash flow problems are very common to each small business, and it's very important that you're aware about this so you can avoid them early on. I'll also talk about some tips that you can follow in end of this video so you can efficiently manage your cash flow. Late payments from customers. Delaying getting paid from customers can interrupt your cash inflow. This also can cause you to miss your own payment deadlines. As a result, you may damage your reputation or end up paying interest. Overstocking inventory. Too much money tied up in unsold products reduces available cash for day-to-day expenses. Lack of budgeting also leads to unnecessary or poorly timed purchases, can deplete your reserves or cash without immediate return. Businesses with peak or off-peak seasons may struggle during slow months. Poor planning for these dips causes shortfalls. No clear view of future cash inflows and outflows or no financial tracking makes it harder for upcoming expenses. Here's an example of how a business can be profitable on paper but still have cash flow problems. As you would see in this slide, Alex make a big sale of $10,000 worth of custom furniture. His costs are wood, labor, and rent for $6,000, and the profit on the paper is $4,000. He can sell this for $10,000, but his customer won't pay for 60 days, which is the payment terms that he has laid out on the invoice. But Alex has already used up existing cash in materials and expenses in this month, so now he has sort of zero cash. Now he has no cash in hand, but his profit on the paper is still $4,000, though it's not usable yet. He's now stuck. Even though his business is profitable, he doesn't have enough money to pay next month's bill. I'll share with you some simple cash flow statements at the end of the video. So to track your cash flow effectively, you should monitor all money coming in and going out on a regular basis. Here's how. Use a cash flow statement. The document shows cash inflow, outflow, and net cash. Use simple tools such as Excel or Google Sheets, or you use ready-made templates with formulas. These are readily available on the internet if you search up some You can also use some softwares such as QuickBooks, Zero, Wave, etc. Track the key areas: operating activities, investing activities, and financing activities. As I mentioned above, regular monitoring is the key. Compare your forecast versus actual. Adjust plans if you're heading for a shortfall. You can also use bank feeds and alerts. Sync your bank account with your software. If possible, set low balance alerts to stay on top of your cash situation. As I mentioned in the previous slide, try these tools. However, try use free or low cost tools to automate and stay in control of your cash position. Here are some practical tips to improve your cash inflow. Invoice quickly and clearly. Send invoices as soon as work is completed. Use clear terms and due dates. Include late payments penalties if appropriate. Offer early payment incentives. Example, 2% off if paid in 10 days. This may speed up customer payments. Cut unnecessary cost, very important. Review subscriptions, utilities, and overheads regularly. Eliminate or reduce non-essential spending. You can also lease instead of buying outright. Leasing equipment or vehicles preserves cash compared to large one-time purchases. Build a cash reserve. Aim to set aside funds during profitable months to cover periods of unprofitable or slow or for emergencies. Improve inventory management. Don't overstock as too much inventory ties up cash. Use just-in-time ordering where possible. Review pricing. Ensure your prices over cost and provide a healthy margin. Don't underprice to compete. This may harm your cash flow. This is an example of very simple cash flow forecast. You can just use an Excel spreadsheet or Google Sheet. You can just state month inflows, outflows, and balances where you put or record your inflows, outflows, and balances regularly, and you can see the closing balances and opening balances in each month as well. And this one is a more comprehensive cash flow statement template where you would see your daily activities coming from operating activities such as cash inflows and outflows from your day-to-day activities, and then investing activities, your inflows and outflows for investing, and financing activities, your inflows and outflows from finance activities such as loan repayments, etc. And then at the end of the template, you can mention cash brought forward from the previous year, and then net increase in cash this year, and then cash carried forward to the next period as well. So the key takeaways from this video is you monitor and you track your cash flow regularly. And also it's a key that you need to plan for your slow periods, that you need try stay on float. The cash has always been and will be the king, so protect it. As I mentioned in my previous slides, use Excel templates, Google Sheets, and use free softwares, and watch more from me, the Finance Fix with Dimuj, so you'll get handy tips from me. If you have any questions on this video, or if you have any questions on any other topic, or if you want me to discuss any new topics, please let me know. Drop a question or two so I can answer to them. And also thank you very much for watching this, and stay connected with the Finance Fix with Dimuj in future. Stay alert on more videos, and I hope you enjoyed this video, and until next time, take care and goodbye.